Synlait Milk, a company that has been increasing in revenue year on year, but has been in a constant downtrend in terms of share price for the last 2 years. Synlait Milk has spent big over the last couple of years, investing $555 million to diversifying its products, manufacturing sites, and customers, and it is now turning its focus to making money from that outlay. Not to mention the recent capital raising of $200 million to further strengthen their balance sheet. So, is this stock about ready to start going back in an upwards trend, and is it a good time to buy? Let's jump right in and find out. Hey, what's up guys, welcome to another video. Hope everyone's ready for the holiday season. We had planned another video, but this company really caught our attention, and so we thought we had to share with you guys immediately. So, let's get right to it. Okay, so as always, a little bit of background. Synlait is a New Zealand-based company supplying milk and milk nutrition products, everywhere from liquid and powder milk, infant formula powder, to butter and cheese through its acquisitions of other companies such as Dairyworks and Talbot Forest Cheese. Synlait exports these products all around the world, either directly or indirectly through customer channels, with their main exports being to Australia and Asia. Synlait's milk is sourced locally from over 200 independent farmers who are paid and rewarded financially for maintaining a high level of quality. Synlait has many facilities to process its milk into a range of products, but their main facility is in Dunsandel. This facility processes more than 700 million litres of milk each year. It is capable of processing 4.2 million litres of raw milk per day, from which up to 440 metric tons of milk powder can be produced. This facility is the only facility capable of producing high levels of infant nutrition, which according to the company, till date is the largest contributor to the company's success and is a vital part in the company's strategy and profitability. However, being that the company's success is heavily reliant on the infant nutrition side of the product range, there's a few risks that the company faces. Firstly, they are heavily reliant on their Dunsandel facility to produce large quantities of infant nutrition. Secondly, although the group sells to many different countries, it is understood that a significant proportion of both infant nutritional and ingredient sales are ultimately consumed in China, meaning one market to sell to. Lastly, Synlait has a heavy reliance on one of their big customers, A2M Milk, who buy up most of their infant nutritional products. So given that the infant nutritional side of the product range is the reason for the company's success, it also comes with risks. One main factory, one main market, and one major customer. Any sudden events to these three could negatively impact the business by a lot, especially their key customer A2 Milk, as A2 has recently been broadening their supply and manufacturing base to also include Fonterra, and has been looking at investing in its own production by buying a controlling stake in Matarua Valley Milk, which means A2 may use Synlait less and less for the infant formula in the future. So the reliance Synlait has on A2 poses a big risk, just like the risk of you missing out on valuable content, so make sure to hit that subscribe button. Fortunately, the company has acknowledged these risks and is on track to mitigating them by diversification. The company has invested $260 million into an infant formula manufacturing plant in Pocono, which is currently functional and started in late 2019. This facility was under legal dispute until recently when the news came out that the dispute had been settled, which saw the company's share price jump almost 20% in one day. Synlait has recently mentioned that 70 million of the recent 200 million capital raise will be allocated to its Pocono and Auckland facilities for customization to cater for its new, as yet unnamed customer. Commercial production for this unnamed customer is currently projected to start mid-2022, which seems very promising. Although not much information about the new customer has been given yet due to confidentiality, they mentioned that the partnership gives them a broader market in Asia Pacific. The company has also mentioned that they are very excited to be on this journey of nutritional products having stronger growth in Asian markets. And in their annual report, they have mentioned the new customer as a progress towards diversifying away from China. If we combine these three statements together, we could expect that the new customer is to be from one of these countries, which is a great step towards diversification.
Now, given that Synlait has a new unnamed customer for which they will start commercially producing for in mid-2022, we need to step back and see who their customers are now and the contract period for each of those customers, so we can get a grasp of where their revenue is coming from and for how long. Synlait has 5 key customers who are on a fixed number of contractual years. Starting with Brightday. Synlait has a 5-year contract with Brightday, which is due for renewal in Feb 2023. Brightday is also the largest shareholder of Synlait, owning 39% of the company. Next is A2 Milk, who is the largest customer of Synlait and a customer that Synlait is heavily reliant on, which is a risk as we mentioned earlier. A2's contract is due for renewal in mid-2025, and A2 also owns 19.8% of Synlait. Other customers include Foodstuffs, who is one of New Zealand's largest retailers, which Synlait has signed an agreement to produce all their private label fresh milk and cream products, which started production in early 2019. New Hope Group, which has a 5-year contract for infant formula, which is due for renewal in August 2022. And finally, Munchkin, a customer that supplies infant formula into Australian market. So by the look of it, Synlait does have enough contracts under their belt to continue to operate as normal until at least 2023. And although A2 is looking to become less reliant on Synlait, the exclusive contract to supply A2's infant formula for Australia, New Zealand and China still has 5 years left for it to expire, so Synlait still has some time left for more diversification. Further helping with their diversification in terms of product range, Synlait has acquired Talbot forest cheese and dairy work. Through this acquisition, the company now has an instant exposure to cheese products and butter, which Synlait plans to synergize over time through vertical integration to further optimize the process. Also, the acquisition enables them to connect directly with consumers in a complementary category, adding business to consumer to their revenue channel. Although Dairy Works and Talbot Forest Cheese together only generated $2.6 million in gross profit this year, this is something to look out for in the future. Now, let's look at the numbers. Although Synlait's share price has been in a downtrend for the last 2 years, their revenue growth has been very positive, going up around 20% every year on average. As you can see in this graph, their revenue of $759 million in 2017 grew to $1.3 billion by 2020, which is very impressive. However, unlike their revenue, their profits have remained unchanged since the big jump in 2018. Although Synlait remains on a strong growth path, unlike A2 Milk Company, Synlait has to make heavy capital investments to drive its growth. With the Pokeno manufacturing facility starting to be built in 2018, their expenditure has increased. But late last year, Pokeno plant has finally started their first production and is now running. However, as we all know, COVID negatively impacted many companies this year, and Synlait is one of them. As the retail Daigou channel was disrupted by reduced tourism from China and the collapse of the international student market, the company expects consumer packaged infant formula volumes to be lower than 2020 until A2 Milk's inventory level resets. As a result, Synlait has forecasted its half-year 2021 net profit to be significantly lower than the 2020 half-year result. In terms of their balance sheet, with the aggressive expansion of their manufacturing sites and acquisition of Dairy Works and Talbot Forest Cheese, Synlait's debt has increased significantly over the years and now has $885 million in total liabilities. And their inventory level being so much higher than last year, so much shows how bad COVID has affected them. But with the $200 million capital raise, which looks like it will be successful, Synlait will be at a much better position for now.
So now, for the question you're here for. Is Sylait Milk a buy now? Let's go over the facts. Yes, the share price has been going down for the last few years, but the main thing is that their revenue has been growing. Given that the company has invested $550 million into expansion over the last few years, and have mentioned that making money will be the main focus going forward is a good sign. Not to mention, they have a new unnamed customer, potentially in Asia, which could significantly increase their revenue. We say significantly because they are investing a lot of capital into customizing their facility in order to cater for this new unnamed customer, which signals that they may generate sufficient revenue from them. But unfortunately, it's not all sunshine and rainbows. COVID's impact to the Daigou channel is still a problem, and short-term outlook for the company projects no growth and profitability. Furthermore, production for this new customer is still far away in 2022, and the impact on revenue from this customer will only be reflected from FY 2023. So in the short term, it wouldn't be surprising to see their shares fluctuate downwards. But in the longer term, we believe Synlait may be a worthwhile investment as they are trying to mitigate their risk, and the new customer production is planned to start well before the exclusive A2 contract runs out in 2025, which means they will have a continuous source of revenue until at least 2025. With the potential increase in revenue when the new customer gets added in. Synlait is also likely to grow, supported by A2's growth direction. So that was our full analysis on Synlait. Let us know your thoughts on the stock and whether it's a buy or a sell for you. And as always, make sure to smash that like button if this video was helpful. And if you're new to our channel, make sure to hit that subscribe button too, as it really motivates us to bring you the latest stock analysis. We'll see you next time.